Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's video, Anthony Power and I are going to be taking a closer look at what we classify as the Tier 2 miner segment. These are companies with a market cap in the neighborhood of about $500+ million, exahash or hash rate in the neighborhood of about 4 to 10, and a total of about 7 companies that we would consider to be in this mid-pack. Now in today's video, we're going to compare, contrast, go through some of the analytics and metrics behind these different companies, and share with you some of our thoughts moving into 2024. Now before we get into all that, please take a second, hit the like button, you guys. It's a huge help to myself, Anthony, and the channel. It's 100% free to do, and it gets this content to other people like yourself who may find value. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you think about these 7 companies, which of the 7 you're holding, and how you think they compare heading into halving and 2024. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got an interesting one for you. Anthony and I are obviously very active on social media, on the forums. This tweet caught our attention this week, talking about some of the tier 2 or mid-tier miners. Now, as I said in the intro, for today's video purposes, we're going to call tier 2 in the 4 to 10 exahash range, about half a billion market cap and up. But Anthony, very interesting. You can see Bitfarms came out on top. We've covered them extensively on the channel, but I'm curious to get your thoughts on this poll and the companies they chose to include.
Yeah, I mean, we see these type of things called time and time again on social media. People have their favorites. Now, when you go on X and start putting a poll there, it only gives you 4 options. I did something similar to this last year and the year before, and I had something like, I think the first one I had over 2,000 responses to this, and it was quite intriguing. If we go back to 2021, 2022, the first time I did it, believe it or not, the top 2 companies that came out from all the mining companies were Hut 8 and Hive Digital. Because in 2021, great years for those 2 companies. You know, Ethereum mining was doing really well. Hive were earning lots and lots of revenues, and Hut 8 also had Ethereum mining, so they were doing really, really well. So move forward a couple of years, and now we're in sort of like 2024, and we see this poll again. So Bitfarms, finished top in this recent poll here, but if we go back to my original poll, they were 3rd in that poll there, and they were quite close to Hut and Hive. They were a very popular stock in 2021 too. They've had their issues. They got rid of all their debt, $160 million of debt over the last 18 months, which is an amazing achievement to do. And they, month after month in 2023, they were the top performing miner from a Bitcoin per exahash metric. So they're a very solid company. They've got a great strategy for getting to, a minimum of 17 exahash by the end of this year. Maybe possibly getting to 21 exahash if they can repurpose some of the machines. So, I can understand why people are looking at those there. But we look at those 4 companies, and we look at Cipher, we look at Wulf, and there's a few other miners that I put into that group. And you quite rightly mentioned, having some sort of a tier 2 category. And I think anything above half a billion in market capitalization should certainly be considered to be part of that. So along with TeraWulf and Bitfarms and the other 2, I would certainly look at BTDR into that bracket. I'd put Hive and Hut also into that bracket, and I'll give you the reasons why I'd include those miners before we start going into a bit more detail. I mean, if you take Hut 8, they've just gone through a merger. Yes, it's been a challenging period for that company over the last 18 months. But this merger now with US BTC is just in its infancy. I mean, literally 2 or 3 months ago, it was announced. And, they've got some plans to, for new contracts coming through. They're growing their HPC, which will mean, revenues coming in that are uncorrelated to Bitcoin. So they've got many, many different revenue streams coming through. They've got a hosting contracts. They've got self-mining contracts. They've just bought 4 more sites in Canada. That came out of this recent bankruptcy. So they're starting to sort of like build and grow and get back to where they were in 2021, because they were a very popular share. Market capitalization of $2.5 billion then. And if you look at what today's market capitalization, you'd be closer if you said something like 750 million. So they're about a third of their market capitalization. Bear in mind, they've just literally doubled in size because they've just merged with an equal size company. So a lot of opportunity there. BitDR don't get as much recognition throughout the space at all at the moment. If you look at their self-mining, 6.7 exahash self-mining. They also do cloud mining, which is where an individual retail like you or me, Bryce, we can go in there, we can buy some hash rate from BitDR. So we can go in and buy, I don't know, say, 20 terahash a second or something like that. We pay for that hash rate and we get a return on that hash rate. And that, for them, is a very profitable source of revenue. They get great margins on that. They also have a significant hosting capacity as well, because they manage a total of about 900 megawatts of energy around the globe. They operate in 3 different continents. They've got 6 sites. They've got another site coming online starting to break ground in Ohio as we speak, so February 2024. So lots of things happening, but people are looking at these miners and thinking these are just self-miners. There's more to these miners than meets the eye, and that's why I'd be keen to include all 3 of these in that group of 4. HIVE Digital, were predominantly an Ethereum miner up until the fork, and when that changed, the revenue streams coming through, and if you go back to August 2022, I think it was like $6 million of Ethereum mining revenue in that month. And then in September, when they repurposed those minings for mining other coins, I think the revenues dropped to about 200,000. So that change happening in 2022 obviously made the company have to change its own direction. And they are changing direction. They've built their Bitcoin hash rate significantly since then. So they're now over 4 exahash. They're announcing these purchases of S21s on a regular basis. So I think they've already had orders in for well over nearly 3 exahash of S21 miners. And what those will do is some of those will be replacing older miners in their portfolio at the moment. And as we come up to the halving, we've articulated that some of these mining companies need to sort of like get their hash rate, as well as increase their hash rate, improve the efficiency of their hash rate. And by buying these S21s, HIVE Digital are going in the right direction there, because it will bring their efficiency right down to the levels that CleanSpark and Marathon and Riot are attaining now and going to be obtaining when they receive their S21s as well. So by having those more efficient miners, it's going to be making it far cheaper for them to mine Bitcoin, going through that halving. And when the Bitcoin halving happens and the cost to mine a Bitcoin literally doubles overnight, it's those companies that have the cheapest energy will prevail. And cheapest energy with efficiency will go hand in hand and make it like literally a double whammy for these companies to get through that period, while other miners who've got more inefficient machines and higher energy costs will have to start switching off because it'll be unprofitable. So I've got those three into there. I don't know what your thoughts are, Bryce.
Yeah, I'm glad you brought that up, Anthony. I understand there's restrictions on the length of the polls. I've dealt with that myself, but definitely more to meet the eye in this tier 2 group. And you also brought up some really interesting points, actually, that we've been talking about in terms of our website as well, Anthony. The geographic reach and expansion of these companies. So starting to add some interactive maps showing where each one of these miners operates. And these alternate revenue streams is something we're actively working with these companies, with the mining officers and the chief of with the mining officers and the operating officers to figure out the best way to accurately capture these alternate revenue streams and compare them between the self-mining operations of these organizations. So great point bringing those companies up. I definitely agree they belong in the same discussion, Anthony, and I like that you're thinking about some of the alternate benefits that they bring to shareholders. So now let's get into the main group here, the 4 that were chosen for this post. Why do you think they chose these 4, and what do you think about Bitfarms coming out on top?
No one can deny, Bitfarms performing as a miner is probably literally unequaled. I mean, only HIVE Digital, Iris Energy, and CleanSpark, if we look at the last 18 months, have come close to what they do on a monthly basis. So when I talk about that particular metric, this is a metric that all the miners look at as well first. It's how many Bitcoins do you get from the actual machines that you're utilizing. so that are energized. And so, the Bitcoin per exahash is a great way of comparing miners with different hash rates, because it brings it down to a common level. And throughout the whole of 2023, HIVE HIVE and Bitfarms were the top two. Bitfarms just pipping HIVE at the end of the year. In 2024, we've only had 1 month of data. Bitfarms and HIVE, I think, were second and third, and Sato had a good month in January. And we alluded to that in the previous podcast. But these miners are consistently doing it month after month. Aris Energy also, and they came quite high up in that poll as well that we saw yesterday. So great management team at Bitfarms. I mean, Ben Gagnon's the chief mining officer, and he's well regarded in this industry. He's very young, but he's been in the Bitcoin space a long time. He actually set up his own mining in Hong Kong many years ago, which is hard to imagine because he looks about, probably about 25 now, but he's been in the space for a long time. He's the chief mining officer of one of the biggest mining companies in North America. And when he talks about Bitcoin mining, everyone listens.
You're sure right, they do listen. And speaking of Ben, we actually have him coming on the program in the middle of March. So stay tuned for that, and feel free to leave any questions below. Sorry to interrupt there, Anthony.
So, great management team there. Diversified in regards to they operate on a number of different countries. So they're operating in Canada at their home base. They've got sites in the US and sites in Paraguay and Argentina. And people have criticised, going into South America. But at the moment, those decisions have proved to be fruitful, and they're actually expanding in both those countries as we speak. And not the only miners to go into there now. Marathon Digital are also have a joint venture in Paraguay. So, when you've got the biggest public listed miner in the world entering a country, you'd expect them to have done their due diligence before they start going into there. So I'd be on, yes, it's having a little bit of cautionary review when you're going through, but the numbers that are coming out with monthly are very, very good. So yeah, Bitfarms is a strong contender to be one of the top picks out of that 7.
Most definitely. And I know Iris, now known as IREN, is also on that list, Anthony. So why don't we talk about them next?
Iris Energy, they've been a public listed company for about 2.5 years now. Australian company, but they're based in North America. And so, they've got, great management team again. They've got, 2 co-CEOs there who've come from sectors where they're well versed in infrastructure, energy, and managing assets. And in this industry itself, the Bitcoin mining industry, that ticks 3 boxes straight away. They've also managed to get around them a team of experts also supporting them. And they've grown, really well in a short space of time. Yes, they had, to default on their loan with NYDIG about sort of 14 months ago, because, effectively the loan was significantly higher than the value of the actual assets. And the default position was that the asset could go back to the actual lender. So effectively, they lost about over 3 exahash of mining companies by defaulting that loan, and then were able to repurchase effectively new machines with cash they had in the actual bank to get their hash rate back up. They've grown since then. They've got a site at Childress that's got potential of 600 megawatts. They're already trying to grow out the first 100 megawatts, and we've seen the first phase of that 20 megawatts already completed. Second phase soon to happen, and they've said that by the middle of 2024 they'll have 10 exahash. And so, like Bitfarms, 10 exahash for these mid-tier miners is looking to be a target to achieve. One thing that differentiates Iris Energy from Bitfarms is the fact that they've got into the high performance computing sector, and it's all about the artificial intelligence, the draw from that, the demand for that power. They started off with a sort of like a purchase of $10 million worth of NVIDIA 100 chips, and only last week they announced that they were buying another $22 million of chips, and they have their first customer, albeit on a sort of like short contract with an option to extend. So they're seeing, the benefits of moving into the HPC market. Effectively, all these mining companies are data center management companies. So they manage large data center sites. And so Iris Energy build extremely good mining facilities. And yes, HPC requires a more higher spec facility, but they believe that the move up to a tier 3 facility from where they currently are isn't as big as some miners would have to do to get to that level themselves. So, that'll bring in additional revenues that aren't correlated to the price of Bitcoin. That sets them up in a good way there. They're still wanting to grow. They still want to get to 10x by the middle of the year, 20x by the end of the year. So, I can see why people are starting to move into that sector there. We then have Wulf, which I know is a firm favorite with the fans at the moment. And Wulf can arguably be part of that group because their energy price is one of the cheapest on the market at the moment. So they have an element of their hash rate at the nuclear facility, Nautilus, and that energy price there is about 2 cents per kilowatt hour. It isn't their whole hash rate; it's a proportion of their hash rate. So the remainder of the hash rate is at the market rate. So what Wulf do every month is they actually provide the blended cost of mining a Bitcoin, and so we get to see that on a monthly basis. They do have one downside at the moment, and they do have more debt on their balance sheet than the other miners that we're talking about now. But they have been actively repaying some of that debt, and the company announced only, I think, last week that they repaid in the last month or so about 40 million of that debt, and they're due to make another payment in April. So if they can start getting that debt down, it puts TeraWulf in a really strong position going through post the halving, because they tick the boxes on everything else. They've got efficient machines, they've got low price energy. Those are two of the most important things to have. They have capacity to grow. So they're growing now. They're already close to their target of 7.9 exahash. I think they're at 7.6 as at the end of January. They aim to get to 10 by middle of the year. And I'm sure we'll get another update to see what they can achieve in the second half of the year. But they're well placed once they can sort that debt position out. Cipher Mining have been a strong miner, one of the strongest performing miners in 2023. And what we've seen from them is that most of their growth is likely to occur in the year 2025, although they have said that if something comes along opportunistic in 2024, they're likely to be able to be in position to move on that. So that'll be interesting to watch. Cipher Energy also, like TeraWulf, have a really, really low cost of energy. If there was one criticism about Cipher, it's their operational costs, which include salaries and associated bonuses, stock compensation, etc., etc. Those costs compared to other miners are probably higher proportionately per Bitcoin. So that's an area that they probably need to look at going into the halving, because everything is going to be effectively twice as much when we get to that halving date itself.
Yeah, great update, Anthony. And it's really interesting you bring up those back office or admin costs, because I was thinking about this in one of my interviews the other day. Bitcoin miners really have no customer, right? They just mine Bitcoin and they sell it into the network or sell it to people looking to buy Bitcoin. So they don't have to have aggressive sales or marketing teams, which for a lot of companies eats up a lot of that overhead cost, right? Is just paying people to be out on the road and marketing their products and getting sales demos together and stuff like that. So for these Bitcoin miners, it's very easy to compare these lines in terms of their budget and expenses. And you're right in saying that Cipher maybe stands out a little bit more compared to some of the other. And the other point you brought up, Anthony, is this divergence we're seeing between the pure play miners that are putting 100% of their effort and resources into core Bitcoin mining, and the other players here who are looking for diversified revenue streams. And ultimately, the price of Bitcoin is going to have a big impact on that based on what we see in this next or expected bull run. Anthony, I'll flip it back to you for any closing thoughts and your outlook on that specific topic.
Yeah, I mean, it's a good point, Bryce. If the Bitcoin price increases, as many analysts believe it will do post the halving, then I believe it's a win-win for these companies that are going to HPC. And the reason I say that is, they are growing hash rate at the same time, so they'll benefit from the BTC price increasing. But with regards to high performance computing, the margins are really, really good. And we've already had the likes of Aidan and Frank on from HIVE Digital, who've explained about the margins. We've seen the recent update from IREN Energy. They indicated from their perspective that for every GPU that's plugged in and serving their high performance computing business, the revenues will be about $2.50 per hour per GPU. and the energy associated with that GPU will be about 6 cents per hour. So you can automatically see there that the margins are going to be really, really good. We're talking margins that some of these miners were doing when Ethereum mining, when HIVE and HUT were sort of quoting, 90% plus margins, when Bitcoin mining was significantly less than that. So, it depends on the price. I know that the sort of like the big four miners, and when we talk about the big four, we talk about the Marathon Digitals, we talk about Riot Platforms, we talk about CleanSpark, we talk about Core Scientific. They're going to be pure Bitcoin self-miners, and that's where they believe the profit is. But if you look at all the other miners below that level, pretty much all of them now have moved into this space. And, you've got to start thinking, are they doing the numbers and saying, if I deploy into HPC, as opposed to using that money to go into new Bitcoin miners and these new S21s where I could have bought them for $14, are they doing the numbers and the returns look better with HPC? Bit Digital announced, a month ago that their revenues will be, towards 50 million annualized. And we'll get to see how much annualized they are in February when they release their monthly update for February, because they're going to release, also their earnings from their high performance computing business. They've just released another update today to say that they're hoping by the end of 2024, annualized revenues could be 100 million. This is a company that only achieved 47 million in terms of mining revenue in the whole of 2023. So, if the margins are as good as HIVE and IREN have led us to believe, and we haven't seen the margins from Bit Digital yet, I'm sure when we get Sam on the podcast next, he'll give us an update, or when we get their earnings release, we'll certainly know from the earnings release what we're talking about. But they're investing significant amounts of money in this space. So, I'd be, having a watchful eye as to where these miners are. But a great deal of them are moving into that. A majority of those miners we talked about today have already started the ball rolling in that particular business.
Yeah, very astute, and it is really a divergence between that tier 1 and tier 2 kind of market cap or size, Anthony. You guys, let us know your thoughts in the comments below. If you're still watching, hit the like button. It's free to do. It's a big help to Anthony, myself, and the channel. If you're not subscribed, McNallie Money, feel free to join. That's all for now. Thanks so much, Anthony, and we'll see you in a week.